What is up, guys? I hope everybody's doing well. I just wanted to come on here and do a quick video. I haven't done a video in a while, guys, and I wanted to go ahead and do it for you guys so you guys could see. All right, so what we're going to be talking about today, we're going to be talking about candlesticks. Just like nothing too crazy, just candlesticks that I mainly use in the market. All right, so what I always say is this: structure tells you if it's a buy or sell. So once price enters a certain price point, you should already know if it's a buy or sell. Candlesticks tell you when to buy or sell. So the difference, again, structure tells you if it's a buy or sell, candlesticks tell you when to buy or sell. So there's certain candlestick variations and certain specific candles that I like to see in the market to tell me when a good time to enter the trade. The reason being is because most of the times I'm entering trades on either exact reversal points or right before, or right a little bit after the price has made its first push into the new corrective phase. So example, if it's on an uptrend, hits a level of resistance, makes its first push down, and now it's about to make its second push down. That's what I'm talking about. So I want to know exactly when to enter, because like if you enter too early at a price point, a lot of times it could continue going up or continue going down if you're in a buy or sell and you enter in a drawdown. So I'm just going to talk about certain candles that I like. All right. First candle, candlesticks that I love, guys, I love long wicks. Bigger the wick, the bigger the story. That's always what, if you guys don't know what Ryan is, that's something I learned from him. Yeah, bigger the wick, the bigger the story. It's like actually pretty true in that regard. Big wicks tell you a lot of stuff. It tells you buyer exhaustion, seller exhaustion. And that's something you need to know. The market is either buying or selling at all times. That's all the market is doing. The market is not faking you out. The market does not move by random. It's not random movements. It's moving correctly. I'll make another video talking about support resistance versus highs and lows. They're two different things. Support resistance is one thing. Highs and lows is something completely different. Like price can break a level of support and not break a low. And that's where a lot of people get messed up when they do like break and retest. That's like retail trading. It's not really valid. So, talk about candles. So, first things first, when I mean high wicks, so upper wicks to the top side mean what? Buyer rejection. That means sellers are entering the market. Wicks towards the downside mean seller exhaustion. Buyers are entering the market. So specifically a candle that you like, if you're going on an uptrend, the best way I could explain, the way I explain it to my guys is like this. If the last 5 candles are bullish, the 6th one should be bullish. There's no trick to it. It's exactly that. It's not if the last 5 candles are bullish, the 6th one should be bearish. No. If everybody's pushing you up, why are you going down? If everybody's pushing you down, why are you going up? Same thing. So if the last 5 candles are bullish, the 6th one should be bullish. So that means that the price starts bullish, shoots up, and then comes right back down. And if it looks something like this, that's clear rejection. That's a perfect trade. Just because, so what I mean by this, think about it, this is on each 4. So the last, basically, it's been on an uptrend. It's been on a consolidating uptrend for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So about 40 hours is in a consolidating uptrend. So for about 40 hours is moving in an uptrend. And then on the 40th to the 44th hour, on the 11th 4-hour candle, it shot up. That means it opened here, shot up, hit a level of resistance, buyers got exhausted, sellers got induced into the market, and dropped down completely. And then once you see it drop down completely, you could tell that price wanted to reject it. Besides the fact that it just dropped down, it also engulfed the body. If this engulfed the wick, it would have just dropped a lot faster. It wouldn't have done this much consolidation. If it engulfed the wick, but it didn't engulf the wick, it engulfed the body only. So price came down to test the wick area and then started rejecting it back up. And then price came back to the left wick, right previous to it, to then come back down. This is just a big double top. 1, 2. Just a double top on a higher time frame. On a small time frame, apologize. So understanding that, when you see this type of candle variation, like a shooting star, I don't really care what you call it. You can call it whatever you want to call it. Just understand what it means. There's too many names for stuff. Just understand what this means. It means high wick. High wick, high wick, high wick. A lot of buyer exhaustion, sellers are induced in the market. Price shut up, did not have enough momentum to continue going up, came right back down, closed bearish. Once this candle closes, you don't want to enter automatically, because if you enter automatically, think about it. everybody knows stop loss above the wick, right? So your stop loss would be there, or however, maybe you use fibs to measure it, whatever the case may be. So let's say you entered right when this closed. Your stop loss would be 98 pips. That is way too much. I don't even trade with that much pips. That is insane amount of pips. That is crazy. I don't trade with that type of many pips. You always want to wait for price to fill the wick at least a little bit, So minimum, allow it to come to the opening, at least, or if not, to the wick that occurred right before this candle. So to the candle wick that occurred right before it. Because if you think about it like this, like it's not a head and shoulders, but depending on how you look at it, left, head, right, left shoulder, head, right shoulder, head and shoulders, So it depends on how you look at it, but price will typically come to try to at least fill the wick. It always wants to fill the wick, so you're maximizing profits. Think about it. From here to here is like 98. If I entered from here to here, it's like 60. I'm basically saving myself 30 pips. 30 pips of stop loss, 30 pips of drawdown, and I'm gaining 30 pips of take profit. So that's why you want to do it. So this is a candle that I definitely look for on all time frames. It's an amazing candle. The second candle I like to look for, I just like to look for long lower wicks. Like this is an easy buy. This is an easy buy down here. Once you see these type of candles, think about it. Price shot all the way down, rejected completely, then closed bullish. Easy, easy, easy. Again, wait for price to fill the wick. Always wait for price to fill the wick to then shoot towards the top side. Always want to wait for price to fill the wick. You see? Buy. Okay, this one is not bullish. It is bearish, so it has a little bit lesser degree of strength, but it's still the same premise. Large lower wick shows clear seller exhaustion. Buy. Now, you have to understand, they have to be located in proper zones. They can't just be located anywhere. They have to be located in proper zones in the market. Okay, they have to be located in proper zones in the market to then continue pushing. Candle, bullish candle push, 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 wick rejection, wick rejection, wick rejection, wick rejection, push, push, push. That's really what I look for, guys. Those are my favorite candles. Obviously, you have like engulfing candles, then you have patterns and stuff like that. But more times than not, you just want to look for specific candles. Like the best way I could explain it, a lot of you guys want to learn a bunch of stuff, but think about it like this. Imagine everything you learn is like a toolbox, right? You put it in your toolbox. You might have 10 buys, all of them be different reasons why they're buys. That's why you need to have a big toolbox. But don't get overwhelmed if you don't figure something out. Like if you can't see patterns correctly, if you don't get candlesticks, that is fine. There's 1,000 different ways to trade. So you just need to figure out something that works for you. Okay? And that's all it is. Price action is not the easiest way to trade, but it is extremely effective. You're just basically making stuff up. Like that's pretty much what we do. The market by itself is just here, and then with our knowledge, we turn it into a buy or we turn it into a sell. So that's what I mean by it. Right? Just simple, large lower wick with strong level support, shoot up, and then you just need to learn certain tricks. The market moves like this. This is how the market really moves. And once people really understand this, once people really understand why it does that, oh, your life will be so much easier. Alright guys, I'm going to let you guys go. I'll talk to you guys later. Hope you guys enjoyed the video. So the same way, large upper wicks to the top side, large lower wicks to the bottom side. On strong zones, H4 and hourly are the best to go by. If you're already in an uptrend and you're just on a higher low and you know price is going to push up because it's respecting the structure, then you can go as low as like 30-minute M15. But if you're not, then don't. But that's what I'll recommend. Alright guys, thank you.